Trading before the market opens refers to participating in pre-market trading sessions, which occur before the official opening of the regular trading hours. Here's how you can trade before the market opens. Check pre-market hours. Pre-market trading hours typically start a few hours before the official market opening. Verify the specific pre-market hours of the exchange you're trading on, as they may vary. Access pre-market data. Use trading platforms or financial news websites to access pre-market data, including price quotes, trading volume, and any relevant news or announcements affecting the market. Place orders. Most brokers offer the option to place orders during pre-market hours. You can submit market orders or limit orders to buy or sell securities before the market officially opens. Be aware of risks. Pre-market trading tends to have lower liquidity and higher volatility compared to regular trading hours. Prices may fluctuate rapidly, and spreads can widen, increasing the risk of slippage. Stay informed. Keep abreast of any news, earning reports, or economic indicators released before the market opens, as these factors can influence pre-market trading activity. Manage risk. Implement sound risk management practices, such as setting stop-loss orders and position sizing, to protect your capital when trading before the market opens.